All right, let's get right to our top calls and look at some of the big movers on the back of analyst recommendations. And we start off with VF Corp. This is the parent company of Vans and the North Face, getting the double upgrade today to buy from sell over at Williams Trading, with the analysts citing a roundtable event that was held on Friday where executives, in his words, showed confidence in their guidance for the full fiscal year. Nevertheless, the share is down about 1% on the day. Next up, let's go right to it. UBS getting an upgrade today to buy over at Bank of America, which called the logic of that government broker deal to buy Credit Suisse impeccable. The analyst says that deal should enhance the scale of the UBS wealth business and give UBS a smaller investment bank balance sheet, which is a good thing. Shares of UBS up about 4% here on the day. And finally, let's take a look at New York Community Bank Corp, having its best day on record, getting raised to outperform over at KBW. This following the bank's decision to buy about $38 billion of Signature Bank assets. Now, KBW analyst Chris McGratty says he sees massive accretion from this deal that should give New York Community Bank Corp and that Flagstar Bank brand greater flexibility. Shares up 34% on the day, and those are some of our top calls. We do want to stick with this, and pleased to say that Chris McGratty is joining us right now. He is the head of U.S. Bank Research over at KBW, a Stifel company. Chris, let's start off with it here. When you talk about the flexibility that this could potentially give New York Community Bank Corp, what are you talking about?
Well, great. Thanks for having me. So New York Community's balance sheet has always been its Achilles heel. The company has a high loan-to-deposit ratio and has relied historically on a lot of borrowings in the market to fund itself. Now, with the Flagstar deal that closed last year, that took them from a pretty tough position to a more neutral position. We think today's transaction with Signature Bank really puts them on their best foot forward going into the future.
For those of our viewers who aren't familiar with it, of course, New York Community Bank, a huge player in the real estate market here in the New York area. Signature Bank also had a pretty big presence, particularly when it came to commercial real estate. How much overlap is there between these two businesses?
Sure. They're both major players in New York. But I think what's interesting about this transaction is what they didn't buy. So Signature was a $100 billion bank. But what we know that New York Community is acquiring, they're only acquiring a fraction of the loan portfolio. And the important part of the acquisition is they're taking on $25 billion in cash. And what that'll do is that'll allow them to pay down higher cost borrowings, and the margins should expand.
Well, Chris, on the topic of what they didn't buy, I know Signature is a crypto-friendly bank, and what's interesting about this acquisition is that New York Community Bancorp said that it didn't acquire any of the digital asset banking or crypto-related assets or deposits. Had it done that, would that have changed your upgrade, your view on this stock?
Sure. I mean, the digital and the crypto space has gone through a tremendous amount of disruption and volatility over the past year. And with that, there's greater regulation that's ascribed to that business. So by them carving that out and leaving that with the FDIC, they can focus on the true corporate community bank model that has been pretty successful in New York. And so what they've got going on is really strong earnings accretion, meaningful tangible book value growth, and a stock that's trading below tangible book, which is the big reason why we went to an outperform rating this morning.
So if I look at your price target right now, your 12-month price target is $10.50. If we look at where shares are trading right now, obviously best day on record since this company went public in 1993, a little bit under $9. Now that we've seen the bulk of this move, I mean, what's going to propel it to that price target that you have?
Sure. I think today's move is significant, but also the last few weeks have been tremendously under pressure for the banks. So what you have now is a stock that's trading still below tangible book value. We think the stock's around 90 to 95% of pro forma tangible book. But what's interesting is this transaction is transformational. It'll allow the ROE and the earnings power of the company to be more sustainable, and we believe investors will eventually put a premium on its price to book multiple that we haven't seen in a long time.
Chris, before we let you go, we have to sort of ask about, I guess, what else is going on out there in the U.S. banking space. Everyone's sort of looking for what the next shoe to drop could be. Are there other banks under your sort of coverage that you think could potentially maybe have some issues that will have to be addressed? Or is the backstop, the Fed backstop, and I guess some of these implicit guarantees that the FDIC is now providing, is that enough to sort of stave off another run or another collapse?
Sure. I mean, this liquidity crisis that we've been dealing with for the last 10 days is the speed at which it's happening is nothing I've ever seen in my 20-year career. We've seen Signature Bank, we've seen Silicon Valley Bank. Both those companies went to the FDIC in pretty short order. Markets are concerned about a company like First Republic. This is a high-quality company with historically a great balance sheet, a great credit quality. But what we're seeing is a spillover effect in terms of the deposit run. And so that's a company that's received a lot of attention, and the stock remains under a lot of stress.